Good morning, everyone, and welcome to the European crossover webinar. And today is going to be NFP, and let's go and take a look at the data that we have for today. We do have non-farm payrolls. Now, we just got Italian unemployment rate and came in at 7.8%. And then at the top of this next hour, we will have Eurozone producer prices. Bear with me. And we are making new highs in equities across the board. We just, oh my goodness, we just hit 31.26. We took a quick pullback here in the SPOO zone. A little bit of, I don't want to say heavy volume, but decent volume here. We just tagged 31.26 a couple minutes ago, or just about, and paired back just a little bit. But certainly that's having its own impact as the dollar is somewhat under pressure. A whole lot, but certainly on its lows. But we did go on and get, as I mentioned, Italian unemployment rate just come out right now. Producer prices will be at the top of the hour for Eurozone. That's Eurozone producer prices. And then non-farm payrolls, looking at 3 million here. 3,000K, but the actual number, let's see here, manufacturing payrolls 311K. Unemployment rate they're looking at is 12.3. That's the Reuters poll. Now that number may be a bit stronger because remember things were reopening, but now with things closing, don't forget a lot of bars and restaurants in the Southwest are now being closed off. I think California did the same thing yesterday. So whatever number it is probably going to be looking, you would think, to fade it. So that's where we stand here. And then as we come, we'll have into the 8:30 Eastern, we'll have Canadian trade balance, export and imports, as well as manufacturing PMI. Then at 9:40 a.m., we'll have ISM, New York Index, and business conditions, as well as durables at 10 a.m. Eastern and factory orders. So a bit of a data-filled day today. Today, well, tomorrow, that is going to be our recognition of July the 4th, which is Independence Day. So government offices will be closed. I think Blake said, Jean, there will be no FACE webinar. Also, there'll be no European crossover webinar, as tomorrow's going to be Independence holiday here. So let's go in and close this out. And just once again, a real quick recap. Italian unemployment rate at 7.8%. Producer prices at the top of this next hour, Eurozone. Then, of course, non-farm payrolls, that's 3,000. We shall see how this plays out. Once again, the number might be actually maybe a number that they may fade a bit, but who's to say anyway? I mean, regardless if it's a number to fade or not, look at the SPOOs at, at 31, had just hit 31, just about 31.26, we're at 31.21. So these numbers are, I mean, the numbers that you're seeing here in the equities, it just keeps on going higher. And then, of course, as I mentioned, Canadian export and imports at 8:30 Eastern with ISM, New York business conditions at 9:45 Eastern with durable goods and factory orders at 10 a.m. Eastern. So let's go and move this out once again. And let's go in and take a look where we stand right here with equities. Quick jump there. So look at this run up in here. Unbelievable. So we did make it up right here at 31.22, which is a level here. That's actually a number that it would have pointed to. I remember I was looking at a number, and I think this might have also been a number that Blake was pointing at. But I remember saying, wow, that'll coincided. You can see right here. Maybe we'll take a little bit of a pair back here, but that was a number that I thought was kind of on the upper end, which was 31.22. You can see it right here on the 30-minute as 31.23. Still, boy, that is unbelievable. I wouldn't have thought that it would have made up to that level, but that's a pretty key level here, 31.23. I think I might have it on the 2 hours, 31.22, but maybe that's about as good as it gets, and then we pare back a little bit, although we did make it up to nearly 31.26. Yeah, there's my 31.22 on the 2 hour. Unbelievable. Let me get all the way up to that area here. Once again, a big run from that where we started out at the beginning of the week. Taking a look at where we stand here in FX futures, you can see here that look at this run we made up here in the euro, actually all the way up to 1303 here on the 30-minute. You can see that, and just a bit of a pair back, and we did see a pretty kick up in volume right up here, right there, as you can see here. Ran up about what, about 1,400 contracts, I would say. On this run up in here, we made one push in here, but that did get us at 1303, and we're just backing off. Not a whole lot, but we're off 10 from there. And that's with the dollar weakening as equities continue to go on and push higher, punch higher, whatever you want to go and call it. And you can see here on the 2 hour chart, not too far away from this trend line that we would have. And yesterday, started out well, and then I ended up going against my own technicals, which really ticked me off because if you look back here, and I did share this, and this really upset me, this is the VWAP from the right here, this low here, May 15th. I guess we could have even pushed it even a little bit further for May 7th, but you can see here as the market found some support here. We even had a hammer, and we did, we went even a little bit further, and once again, I think we could have pushed this down to right there, that significant low there, probably even further back. But anyway, nonetheless, we had formed a nice hammer bottom and opened the door for us to move much higher, and certainly we did, and that was not a stopping point. We actually made it, and if you look at this, would have been at least to move up to potentially, there was a little bit of a log jam, but that was a nice little hammer bottom on the 2 hour chart and cleared out the lows here and really opened the door for us to move higher. And so if I had just gone and paid attention just to the technicals, would not have stepped in and shorted in that area. Came in and short a little bit too soon. The market, and at the time, the thing that upset me was that I was stating here was, hey, look, this is going to be a good, strong 30-minute close, which meant there was still more to go. And here I was stepping in front of this, so it really upset me. But for not just simply following the technicals. But you can see here with the euro, also here with cable, even punching up here with cable here, obviously with the dollar on its lows. Making a push up here. Let's go and take a look at the news. Well, we see the equities here, right here at that 31.23. Dollar falls to 1 week lows on data and hopes. The U.S. dollar slipped to a 1 week low against its rivals on Thursday's upbeat U.S. and economic data, sharpened risk appetite with hopes for a COVID-19 vaccine breakthrough and also helping sentiment. Against the basket of currencies, the greenback is on track for its biggest weekly drop in a month of 4/10. However, it could swing in either direction depending on the U.S. jobs data due at 12:30 GMT. Non-farm payrolls figures are expected to show an increase of 3 million jobs last month, but estimates vary widely amid concerns about whether the U.S. economy can sustain its recovery as coronavirus infections surge and some states reimpose limits on business and personal activity. A renewed significant fall in the unemployment rate would make the market feel confident about a recovery, said Tu Lan Wen. In that case, we would seek risk on, which would theoretically be negative for the U.S. country since the U.S. dollar has been in demand as a safe haven during the crisis. Despite the dollar's recent spell of weakness, the greenback is still up 2.5% from 2020, low of 94.6 hit early in March. A Reuters poll predicts more weakness for the greenback over the next 12 months. Supporting this sentiment in the meantime was the news that COVID-19 vaccine developed by German biotech firm and U.S. pharmaceutical giant Pfizer had shown potential in early-stage human trials. U.S. manufacturing activity also rebounded more than expected in June, with the Institutes for Supply Management Manufacturing Activity Index hitting its highest in 14 months. Similar surveys from China, Germany, and France all point to an improvement in factory activity. The positive risk sentiment boosted other risk-oriented currencies, such as the Kiwi, which gained nearly 0.5% versus the greenback. The mood also helped lift sterling above 125 for the first time in a week. It also sat at 24.82, having bounced almost 2% from a 1 month low hit on Monday. And the morning bid. Jobs at a time of pandemic. June payrolls report is important, but like most data, it's backward looking, just as during the initial stages of the pandemic, when economic indicators were largely disregarded by markets. This may happen again now that U.S. coronavirus cases are rising relentlessly. A record single-day spike in cases was posted on Wednesday. Reuters survey of economists predicts the non-farm payrolls increasing by 3 million in June, after 2.5 million in jobs were created in May. Other data from retail sales to housing prices have shown improvement, and yesterday, the Institute for Supply Management said its factory activity jumped 52.6 in June. But California and New York City have closed indoor dining and some bars, while Apple is reclosing another 77 U.S. stores, meaning activity could be crimped in July. COVID-19 resurgence worries are far less applicable to Europe and East Asia. So far better than expected on German jobless claims, and retail sales are a good sign. Longer term, though, if the U.S. continues to get sicker, can the rest of the world recover? Currently, markets have gotten their eyes firmly on the chances of a vaccine. Today, that momentum is coming through with gains across Asia and Europe going firmer. World stocks are on track for the fourth straight day of gains, though Wall Street futures are flat, showing some investors are on the sidelines before the payroll. But as I said, we've just made up here to 31.23 in the SPOOs. Risk-oriented currencies, including the Kiwi dollar, gained against the U.S. dollar, which is on its back foot. Bond markets are also reacting to data improvement. U.S. 10-year yields rose across above 7/10, and German 10-year yields are at 3-week highs. Associated British Foods ABF says trading in Primark stores have been reopened after coronavirus lockdown has been reassuring and encouraging. And that's going to be it there. So you can see we're just hugging up here the 31.23, and we've really pushed these markets up in here. Almost as a setup to this 31.26 before, just a slight pullback. Pretty strong concern, you would think, we're coming into non-farm payrolls, but everything seems to be different. I mean, we used to be traded most of the time relatively quite ahead of the non-farm payrolls, but certainly that is not the case. And with that, we're going to move into the analysis. Just bear with me. So the euro saw a stout rebound off the lows, rallying to 1275 before paring back. Resistance for NFP will be 1320 with support at 1192. So right there, we're looking, it's actually right there. You see there, right in here. So we're looking at this bar low here. It's going to give us 1320. And actually, you can push up as high as that number comes in at 1322. So we'll call it 1322 versus 1320. And support 1192. Well, considering how we've added on, 1192 would be a bit of a stretch. So we're going to go with this low right in here. See the low with this bar. Confluence is on with the lows here. Right there. That's going to be 1213. 1213, considering how far we're stretched up in here. Right now we're at 1283. Right there. 1209. We'll call it 1209. Because we are certainly adding on the dollar continues to remain under pressure. Let's go move into the cable. So the cable continued its advance ahead of NFP. Resistance will be 2546 with support at 2346, but obviously we'll continue to add on, so we'll have to adjust that. But we're looking at 2546 for resistance coming in today for the cable. Right in here. Once again, the dollar continues to remain under pressure. $23.46, we'll have to go and adjust that. There's a word coming up here. I don't see things turning around here. I mean, anything's possible, but that would be one heck of a turnaround. Look how far we've come back here. Let's go and take a look at a 2-hour chart. Definitely has been up, and away. You can see a lot of good volume touches right in here. So it'd be 24.13. Good solid rebound here. We've seen the cable off of those lows. It's been one heck of a move back. Let's go and move in now to the Aussie dollar. So the Aussie continues its upside drift, having challenged the bias chart resistance at 69.31. Resistance for NFP will be 69.60. You see that 69.60 coming across the board. With support at 68.33. Okay, the Kiwi, like its cousin Aussie, has drifted higher. Resistance on Thursday will be 69, well, that one, 65.35, with support at 64.05. So we're looking for 65.35 with support at 64.05. Onto the dollar CAD. So the dollar CAD finished the day a bit higher following two consecutive down days. Resistance will be 36.57 as we head into NFP. We support at 35.19. Of course, we had a little bit wider ranges with NFP 36.57 on the upside with 35.19 on the downside. So the dollar peso slid back on Wednesday, unable to maintain price above 23 even. Support will be 22.32 with resistance at 22.94. So we'll still remain on our back foot. So it's going to be 22.32. Coming in right there. You can see all these touches coming in. So the dollar yen, after taking out stops above 108, stopping short of the bias chart resistance, then fell back with a thud to 750. Support on Thursday will be 696 with resistance at 798. So we're probably having a bit of a wider gamut, but certainly we've seen that kind of reaction here with the dollar yen. We start out the week kind of pushing a little bit higher. We take out stops, and then we turn around and fall all the way back. So, and look at these SPOOs, new highs again, 31.28. Holy smokes. Um, And onto the dollar index. So the dollar index traded lower on Wednesday ahead of NFP after failing to get above the 97.89. Remember, we have that tag since the beginning of the week as a key level. We even talked about that even though the market was able to close higher on Friday, it was disappointing. We would have expected a bigger move and challenge in 97.89. We couldn't. We finally did go on that challenge on Tuesday. We came up short. Then Wednesday we had further downside or a pullback, and then we're seeing further downside now. Support will be 96.82. Well, we're pretty close to that right now. We may have to open that a little bit lower. We had 96.82. We'll go to a 2-hour chart, see if we can see. We're almost 96.87 right now. We'll go with 96.78. You can see the touches coming across here. 96.78. And resistance. Right there. Let's see. We do get a rebound. This would be actually the dead center of that resistance would be 97.44. We'll go with that. 97.44. And that'll wrap it up for the majors. We'll go and move on to the cross rates. Well, we're still continuing to press up in here, and no changes on the resistance. It's still going to remain 70.10. They're still pressing a little bit hard, just gently hard, but it's going to be 70.10 here. And downside 69.20. So no changes here in the QE Let's go and move on into the Euro Yen. Well, we had our resistance here, 21.51. Remember, we came on air. They just came pretty close, came up but just a hair short of that 21.51, and that's still going to remain resistance. So no changes here on QEN at 21.51 with our support at 20.62. We did go on and look at this. We cleaned them out down here. We came up pretty strong. So look, yesterday we came as low as, holy smokes, down to 20.23 before rebounding. And we're pushing up a little bit hard. So it's still going to be 21.51. On the downside, we'll go on and keep that 20.62. Anything, it looks even better right now at 20.62 to hold there. And Euro odd, just really not going anywhere. We did press a little bit lower yesterday. Low yesterday was 62 even. We had 62.27. Right now they're at 62.93. So we're going to keep the same here at 62.27. We do have 63.19. We're a little bit closer here. Right there, you see this close there is 63, call it 63.70. That will move that up a little bit higher. And with that, we'll move on to the Euro Kiwi. So we're just a little bit pressed a little bit here on the weaker side here. We had support at 73.53. We've punched a little bit lower, not any real significance. We'll go and take a look where we stand on the 2-hour chart. A little bit too volume areas right in there. The strength of the Kiwi is something else. We'll get a little bit of a rebound. So support's going to be right there. We'll go with the 73.16. Kind of holding around. Maybe we'll see a little bit of evening up of positions. And resistance is going to be 74 even. And on to the ASEAN. Well, we are securing a little bit of footing above the 74.26, as you can see. We'll take a look at the 2-hour chart. We had it previously at 74.73. The only thing we'll move a little bit higher is right there, 74.85. So we will move it a bit higher, 74.85 for resistance. And support will remain the same at 73.85. Remember when the Aussie yen used to be a proxy for risk, and that's just really not the case anymore. I mean, look at the spoons there, 31.30. Oh my goodness! And look at this, the Aussie yen is still pretty much down in the dumps. You used to be able to trade this as if you were trading, equities, and that's not really the case anymore. You can see, look at that. Let's go move into the guppy. Starting improvement here in the guppy as we moved higher. Still pressing higher. Let's go and take a look at a 2-hour chart. The next key resistance level is going to come here if we can challenge. I don't know if we'll see that today, but going forward, it'd be 34.96. So we're going to hold in here. This is, for now, it's going to be 33.78. We'll pare back just a bit, which would be 33.65. 33.65. And let's go with sterling odd. Finally start to pick itself up a little bit closer, and resistance is going to be right there, 8106. 8106. And moving to the 2-hour for some chart for support. It's going to be right there, 79.98. 79.98 for support. And you can see here the dollar index is still pressing lower here. We have 96.78. We're not too far from there at that point. Had a pretty good stretch here in the euro too. Almost made it up here to this 1308. Now we do have buy chart resistance for today at 1322, but things have turned around here for the euro as we talked about. If you look here, yesterday we saw a pretty nice rebound. It was actually more pronounced as a hammer here in the futures. Certain things have turned here, and we've punched to punch up higher here. And you can see right there that 1308. And there's a 1322 coming in right here for resistance. Pretty good strong move here in the cable. Look at that. You can see we've just about made it appear to 50% back. Just about, which would be 25.32. And it comes in at a resistance level too. 25.32. We actually have our buy chart resistance today for 25.46. So solid moves here in the euro and the cable. So with that, we'll go and wrap up today. Remember, tomorrow is that's why we're having non-farm payroll today, because it'll be observance of July the 4th, Independence Day. We will have many government offices and markets closed here in the States. So as an indicated, there won't be a face webinar tomorrow, nor will there be a European crossover webinar. So we shall see you in the chat room, and get ready for non-farm payrolls, and good luck all.